Have you ever wondered what a massive 63% jump in profit actually looks like under the hood? I mean, when a company reports a number that huge, you just know something absolutely exceptional is happening on the operational level.
Welcome to this explainer. Today, our goal is simple, but it's incredibly important. We're going to distill Titan Company's heavily data-packed quarterly report for Q1 FY27 into a clear, structured story. Titan just dropped some absolutely stellar earnings figures. And look, instead of just reading you a boring list of numbers, we are going to map out exactly how they achieved such a blockbuster quarter.
So here is our roadmap for today. We'll start with the headline numbers, then move into profit margins explained. Follow that up with the segment breakdown, and finally, we'll look at the market's reaction.
All right, let's dive into Section 1, the headline numbers, expectation versus reality.
We are looking at a staggering 29.25% year-over-year revenue growth, bringing it up to 21,356 crore rupees. Now, you might notice that 20.67% quarter-over-quarter drop, but honestly, that just reflects your typical postseason cooling. The massive year-over-year figure is what really matters here, and it proves Titan's growth engine is absolutely roaring.
Just take a look at the sheer scale of these year-over-year leaps. Beyond that 29% revenue jump, EBITDA surged by nearly 58%. And that operational success? It translated directly to the bottom line. Profit after tax skyrocketed nearly 63% to 1,777 crore rupees, and earnings per share perfectly mirrored that leap, hitting 20.03 rupees per share. You guys, these aren't just your standard incremental gains. These are literally paradigm-shifting leaps in performance.
Okay, moving right along to Section 2, Profit Margins Explained. Let's get into the mechanics of this growth.
To really understand this quarter, the EBITDA margin is our purest health check. Basically, when you strip away the tax environments and complex accounting structures, it shows us exactly how much pure operating profit Titan is actually keeping out of every single rupee they earn. Back in Q4 of FY26, their margin sat at 7.2%. In Q1 of last year, it was a respectable 11.1%, but in Q1 of FY27, it surged to 13.5%. That is a massive 6.3 percentage point jump from just the previous quarter and nearly a 2.5-point jump year over year. What this tells us is that Titan isn't just selling more volume, they are becoming significantly more efficient at selling it.
And you better believe that operational efficiency trickled straight down. Profit after tax surged to 1,777 crore rupees, which pushed the PAT margin up by 1.72 percentage points year over year to 8.32%. For a company operating at Titan's massive scale, adding nearly 2 full percentage points to the net profit, that is an absolute home run.
So, where is all this coming from? That brings us to Section 3, Segment Breakdown, the 3 pillars.
It's pretty obvious that the jewelry segment is the absolute hero here, generating a staggering 19,002 crore rupees in revenue for just one single quarter. I mean, wow. It is the undisputed anchor of Titan's business, completely dwarfing all the other segments. Watches comes in a distant second at 1,543 crore rupees, followed by others, eye care, and corporate. Clearly, as jewelry goes, so goes Titan.
But while jewelry is definitely the anchor, Titan Company isn't a one-trick pony when it comes to growth. Sure, jewelry grew at an incredible 29.73%, which, by the way, is wild for a segment of that massive size. But right alongside it, watches grew by 21.21%, and eye care expanded by 21.43%. They're seeing solid top-line momentum and strong double-digit expansion across literally every single one of their major business verticals. It is a comprehensive, across-the-board victory.
Okay, let's pivot for a second. Section 4, the market's reaction. Time to zoom out.
Now, this introduces a really fascinating dynamic. When the closing bell rang on August 7th, despite reporting a 63% jump in profits, Titan's share price actually closed 1.14% lower. No way, right? You'd think it would be through the roof.
Well, zooming out resolves this little mystery almost immediately. While the stock dropped slightly on earnings day, it had already returned 22% year-to-date and 46% over the trailing 12 months. It's your classic buy the rumor, sell the news event. The market heavily anticipated a fantastic quarter, and when that stellar news finally became official, some investors simply decided to take their profits off the table.
So, what does this all mean? The crucial takeaway here is that Titan Company just delivered an absolute masterclass in operational efficiency and dominant segment performance. They turned strong revenue growth into even stronger profit margins, driven by a nearly unstoppable jewelry division. But, as always with financial markets, the past is written and the future is a wide-open question. Given the stellar long-term gains we've just seen and a massive 46% return over the last year, it leaves us with one provocative thought to ponder. With this kind of momentum and a highly demanding market expectation already baked into the price, just how much higher can Titan climb? Thanks so much for joining me on this explainer. I'll catch you next time.